Good afternoon to you all. Little legal disclaimer. Obviously, this is all provided for, educational purposes. And if you guys have any questions at any time, please feel free to go ahead and type them in the chat. If I don't respond, if you can help me just and let me know that there is a question there, please. So basically, this is a little bit about who I am, where you can find me, where you can follow me. I am Airplane Jane. Why did that name come about? Because I do have my pilot's license and I worked in aviation prior to becoming an intraday and swing trader. I did have experience doing value trading. Prior to that, I grew up with my parents talking about the Wall Street Journal at the breakfast table, and I did have my Series 7 to work as a broker back in 2000. However, seeing the devastation of the dot-com bubble and being in an office where actually the WorldCom office had their employees' options, and I saw devastation happen to them, I thought, you know what? I'm going to follow my passion and go to culinary school in Italy, and subsequently came back to trading after having my first daughter, looking for a career to work from home, have financial freedom, have the flexibility to be able to take off a day if I had to in case she was sick. And now we have a second daughter and I'm still absolutely loving it. So you can find me on Twitter at Airplane Jane _YUL, or just search Airplane Jane. Jane _YUL. Then Instagram, Miss Airplane Jane, YouTube at Airplane Jane, LinkedIn, Jane Gallina, Sugar Airplane Jane for Facebook, cjanetrade.com is my website where I do weekly or bi-weekly blogs. I also post a watch list there, and my email, if you guys ever have any questions, feel free to email me. So we'll go ahead and get into it. Many intraday traders, like Mira was talking about, do look for the gapping stocks. So what's really, really important to me is going to be the volume that's there to back up the move. Is this the bottom one? Is this credible, or is this going to gap and crap? Is it going to be where the big guys just hyped it up with a little bit of volume and now they're going ahead and going to drop it? Something else that I really look at, I don't know that there's many traders out there, except for Ross Cameron is probably one that really watches the float of the stock, because you're going to see why I watch the float of the stock. Does it have the breakout potential with a high short float volume for the day? And is it an earnings or merger? What is the catalyst and news behind this? And is this the first time that the gap has happened for this stock? And how did it react in the past if it did gap? So what I look at, this was from today. This is going to be my morning scan that I use on Trade Ideas. And you can see that it has the symbol, the price, the percentage of the price gap, the percentage gap, the volume today, the company name, the earnings date. So it will show you, if it's got a 0.025 or a negative 0.25, you will see which ones, like 0.25 is going to show you, oh, that one reported this morning. So that one's going to probably be fairly volatile. A negative 0.25 would be reporting after the close, so that you know that you probably would not want to necessarily hold that one overnight. If you were thinking, oh, this looks like it could be a great swing stock, you're pretty much gambling if you're going to be holding it overnight going into earnings. And then I also have the gap downs too with the negatives right there, so you can see. And I also look at, for the gapping up stocks, the position in range for the year and the lifetime position in range. As you guys saw last week, we had Roku that really broke out and it kept breaking out. So why is the float important? So pretty much any float that's less than 20 million for me, which the float, the stock float, is going to be the outstanding shares minus what the insiders hold, and that's going to leave the public float that's allowed to be traded. So if you had 100 million shares that are released, 80 million are held by the insiders, that 20 million left over would be the public stock float, and that would be a very low float in my opinion. Compared to a stock that might have 1 billion shares or 100 million shares, that's going to be much higher. And if you imagine that, say, you're looking at the float as somewhat of a train, right? So you have 20 cars of a train that are lined up. That's going to take less power to move it than a train that has 1,000 cars or 100 cars. So you can see that the volume bars, if that is proportionate to the amount of float all in one bar, you're going to have a massive move, right? Because you know that the majority of the volume is being traded right that day. Now, is it a big institutional buyer, as Mira was talking about, or are these a lot of low float runners, that traders that really love these low float runners, and they're getting on board to make it go long or getting on board to drive it down to short it? One of the ones today. This one happened earlier today, and it was solely this. You do have the definition of low float right there as well from the New York Stock Exchange. But basically, you can see this one has 5.2 million shares. And at the time that I did this slide, there was 4.8 million shares that were traded. So that's almost the entire float that was traded for the day. And you can see if you look at the chart, it had resistance at 9.5, and then it came down to support at around 850. More buyers were stepping in, and you can see that on the volume bars too. You can see where we had that drop down right here. Can you see my arrow on my screen? Can you see me pointing here? So right here, you can see that we had the buyers stepping in and then drove it back up. You can also tell by the wick as well, and it's hovering right there around the VWAP. Then it never really broke below VWAP. And then once we started to have candles breaking up to break that 950 resistance, again, that would be another entry point because you're breaking the resistance. You had all of those sellers that were there earlier. That first time that it tested 950, there were more sellers than there were buyers. It dropped it down. The second time, there's less sellers because many of them were taken out in the first portion of the selling, and now the buyers are taking over, which is what's creating that breakout. And as a lower float stock, you will see that once the buyers start getting on board, you've got two things that are creating the momentum. You have the new buyers that are stepping in saying, hey, this is a breakout. And you also have the shorts that are starting to feel squeezed. So you have the two that are combining together. So it's almost like double momentum that is then going to have it skyrocket up. Then again, it found the resistance up there around 1125, 1130. And pulled back down. These lines that I do have on my chart, I have the 4 EMA, which is the fuchsia line, and the purple is the 8 EMA. Then the next green one down where it has 1130 right there, that is going to be the 15 EMA. The gray line is the VWAP, and the dotted line is the 21 EMA. So basically, low float runners have a lot of high volatility because of the supply and demand. If it has a lower supply available and a higher demand, it's just naturally going to move faster. Say you were wanting to buy a house and there's only 100 houses on the market, but you have 5,000 buyers. What's likely going to happen to the price? Those prices are likely going to be running up because you're going to have the demand, and then you'll find a bidding war. So that would be considered a seller's market. In this scenario of solely going up, as a buyer, you're thinking, yes, it's going, it's running, it's running, it's running. But as quickly as a low float stock can run up, you also have that flip side that once the sellers start stepping in and there's no more buyers to go ahead and hold it up, you're going to find out that those, the shares are going to drop as fast as it rose. All right, so here we have solely, I do look at volume bot as well to look to see for the for the short volume that was traded the day prior. So you can see solely actually did have over 50%. It had 68.36% short float volume. And so it was a low volume that was traded the day prior. However, you also have to remember that this stock overall only has the 5.2 million in the float. So even though it is a lower volume, it's still, once you start seeing that short float volume has been exceeded, that was held overnight, you're going to see that that's going to start to run up. So that's something that I look at on my daily watch list. Something else that's very important that I had on the list as well, is it an earnings stock? Is that earnings going to be happening that day or the next day or 5 days away from now? And one of my favorite websites, I really love giving out people free tools because I remember when I was first starting out, that was something I was looking for. So earningswhisper.com, also on Twitter, they are great for really letting you know when the earnings is coming out, what is the projected earnings, as well as if you go and if anybody uses Thinkorswim, you can see the market maker's expected move. So you can see for, say, the volatility in an option the day prior, you can say, okay, well, they're expecting maybe a $3 move. And if it were to gap up more than $5, then you're really going to see a different change in the price of your options, because anything less than that $3 and your options might not be moving very much at all, if any, or you might have a loss if you held it overnight because they already had that implied move built into the premium and the price of the option. So it's very important to know when a stock has earnings if you are looking to hold it at all for swinging it. So this is one that did gap up today, BIOC. It was one of the top ones on the gapping list for the day. So you can see this one. All right, so BIOC, again, let's check the float, right? This one has 18.82 million. So that is considered a lower float stock, right? And how does the volume affect the stock in the past? So when I'm looking at stocks for my gapping list, I will look at 15 minutes, I will look at 45 minutes, I will look at a daily chart as well, so that I can see what has happened in the past. It's not an indication exactly of what's going to happen in the future. However, computers and humans analyzing it are going to look back at the past resistance and past support levels to go ahead and create their levels for their trading style. As Mir was saying, that many times you will see a gap get filled. So it's important to know, how is that gap filled in the past? If it's been filled, how are these computers and how are the traders looking at it? Now, this one in particular is a pharmaceutical company. You know, did it have phase 2, phase 3, or initial information that was released by the FDA? Today, BIOC itself had a patent in China that was announced, but you can see it gapped up based on the news. However, it did not hold that. So this is a sample of how I do my watch list every day, right? So I'm looking at the stocks, I'm looking for the volume, the big volume ones. I'm looking for stocks that have more than 100,000, because the stocks that have less than 100,000 could be manipulation. And if you don't believe in manipulation of the market, it is 100% manipulated. You can see the big block trades as well that come through. There's some great people that do tweet out about the block trades. Also, I do also work with Stephanie Kammerman in the Stock Whisperer room, and to see the block trades and then see the reaction of the stocks afterwards is simply amazing. And you can see that as well. Pre-market, you can see those stocks that have the big volume, which go ahead and they set up the support and resistance, and then you just trade it off of that support and resistance for that day. So I typically will create a volatile stock list of 10 stocks, potential longs and potential shorts. And I say potential because if that support or resistance is broken and it has the volume behind it, that's where the momentum and intraday trade is going to happen. For the potential longs, I do break it down to have that daily short flow volume as well, because if you do have something that's over 50%, then there could be a likelihood of that stock going ahead and squeezing, because you have double the momentum potentially. You have the shorts that are feeling the pressure. They might be getting margin calls right at open. And then you have some other buyers coming in on board. They're saying, hey, I want to get into this. This is gapping up. This is beautiful. I want to take a position. All right, so on my list, I broke it down. Wow, I really sped through everything. So I broke it down here. You can see in the mornings, I do a support and resistance line. So for TSS, I had 109.95 and 118. That's back on the 15-minute chart for pre-market. I'm looking at that, and you can see pretty much this one right ahead. You know, when that resistance was broken, this one went ahead and it ran on up to roughly 123 before it had the sellers stepping in and bringing it down. So that's a nice $5 move, right? Right in the first 15 minutes of the market being open. Same with TRXC. So TRXC, same thing. I like to back it out and look at the big picture to see where that support and resistance is, because you are going to see many times that that support and resistance is a prior level that has been established. So for TRXC, it broke above, had a massive spike up in the beginning, higher float, which I'm surprised that it ran quite so much in the beginning, but then it came back, tested VWAP, and broke it, and really never went above the VWAP there. JEMI, again, this one had a support of 257 and a resistance, which you can see had acted as a double top in the past. And right at the beginning, it just sold off, broke through that support, and it never went above that support as well. Many times you will see that as well, that you have something that is a support and then it flips to become resistance, or it's a prior resistance and then it flips to become support, because the computers are almost flipped as well, so that they no longer buy there, but instead they're holding it and they're propping it up, supporting it there. So next one's on the list, we had FCAU with Fiat Chrysler, who was talking about merging with Renault. And this was a case of hype, right? A hype of news, nothing confirmed. So it went ahead and it bounced up. And you can see clearly on the chart on the right here, the support and resistance, it never really broke it either way. So right now, this one would be a good one to watch for later in the day for potential breakdown or breakout, because right now it's just churning in the middle. So that one would not be a good one for trading. It unfortunately did not break the levels. It did not produce a trade based on breaking the levels. And when I'm creating these lists, I'm looking to see for that trade to break the resistance or break the support. Do you guys have any questions at all while I'm zooming along here? So next one I had was Momo, and you can see Momo again set up right there. We had the support and the resistance, broke it and never looked back really. It's hit the 21 moving average. Let me see where it is right now out of my own curiosity. So right here when I did that, it's now at 271.71. So it's actually come down and broke below, it broke below the upper resistance there. But pretty much all day, if you'd bought when it broke out, you could have gone ahead and made a profit. And it went all the way up to a high of 29.48 today. So a nice $1.60 profit if you were able to capture the entire move. And for Foot Locker, so Momo is also one, they actually had earnings today. So you would expect there to be more volatility and more people looking at that, because when you're trading a stock that does have earnings, you want to make sure that if it's actually had the earnings announcement that day, it's going to be better to trade the stock as opposed to trading the options, because the options already have that move built in by the market makers. And so you're going to see that the decay of the option is going to happen much more quickly over that initial first day of earnings. So it's actually better to go ahead and trade the stock the actual day of earnings, in my opinion. I used to have my Series 7, but of course, guys, these are all my opinions. Then we had Foot Locker that had, you can see on the chart here on the left that Foot Locker went down and it tested the low of the year and broke down below. That had a new 52-week low. So anticipating today that we might have a secondary breakdown and sell-off by institutions for that second day. And right now it's really holding within. It had a little bump up above during the lunchtime hour. However, for the overall time of trading today, it's just been churning and consolidating. So that one's another one to watch for later on. And then the last one for the list for today, so we had Tesla. And Tesla, again, everybody knows all the news about Tesla. It's going down, all the bears are jumping on it, everything like that. And that there's also the bull side, so that they're saying, oh my goodness, this is so oversold, this is going to squeeze to the moon and everybody's going to be hurt. And basically, if you just look at the technicals of it and you look at the resistance for support and resistance for the pre-market, so this one actually had a trade two ways, right? You had the resistance that got broken and then it squeezed up and it hit almost 195. And then it also broke down, and it broke down through that support from Friday. And now we have it sort of churning in the middle. It's actually 190.59 right now. And so it's right in the middle, but you could have made a trade both ways on this one if you had patience. And also something else that I do look at as well, Mir was talking about, is, you can see Goldman Sachs on the books. And that's something that I'm going to look at as well and see, hey, where are these people pre-market? What is going on? Where is the big seller? Where is the big buyer? What are they doing while it's happening? So not only just looking at the chart, but also looking at level 2, because those big buyers and sellers are going to set that ceiling or that floor in which it needs to be broken. And you can see it pre-market if you notate it, you put an alert on your chart, hey, it's broken out above this. You don't necessarily have to watch 10 different charts at once. However, you can go ahead and have the computer automation say, hey, they've gone ahead and they've broken this level, the buyers are taking over or the sellers are taking over, check it out. Maybe it's going to bounce there and it might come back down a second time, check it out the second time, and that way you're going to be able to profit and follow the trend and follow the volume and follow the momentum. Because if you're going to be fighting the big guys and fighting the big institutional traders where all the volume is, that's going to end up really hurting you. So many times the easiest things to do can be the hardest things to do. So we always know necessarily what we should be doing. However, that can be really tough sometimes. But as I mentioned before, if you do see, cut your losses early. If you do see that a pre-market resistance or support has been broken and you are trying to trade it the opposite way because you got in a little early, you were anticipating it, you were thinking instead of just letting the chart tell you how to trade, then go ahead and get out. Sometimes the best trade can be taking a small loss as opposed to taking a huge loss because you've abided by the rules. So definitely do that. Make sure to protect your profits as you are in a profit. Go ahead, and one thing that I absolutely love doing is I'd like to do a trailing stop. Once I'm in a profit, no matter what, I'd like to go ahead and put a trailing stop in. I want to go ahead and lock a profit on that so that I'm not hurting myself later on. And then enjoy the process. Go ahead and aim for green days because all those green days are going to add up. As Mir was talking about in the SPY gap trade, you're not always going to have a winner. However, those winning days, if you continue to properly manage your money, your winning days are going to outrun your smaller days. And if you have smaller losses, then you're going to be growing your account. And lock those profits one trade at a time, carpe profit. So I actually sped through everything super quickly. And I wanted to talk about the Modern Trader Summit. So I am going to be hosting this in Montreal this June, and we have traders that are going to be speaking about candlesticks, cryptos, futures, trading mindset, trading oil, trading with AI, and multiple time frame analysis, as well as risk management. So for everybody that is paying attention today or watching this later, you can get a 10% discount with Traders Talk altogether as one word, and prices will be going up on June 1st. And then again, so if you guys have any questions, I'm happy to field any questions. I really zoomed through everything. Or if there's anything that you guys want to see. No questions? Let me just put this chart up here so you guys can see it. We can talk about, like today with Baba. Sorry, I'm having a problem dragging my screen over. I'll talk about live stocks here. So here we've seen with Baba. So Baba was one that they'd actually announced today that they were having, they were going to go ahead and do this 20 billion listing out in Hong Kong. And then you can see right ahead, I wrote this on the side. This was an additional one that I had for short for myself. And I put a resistance of 155.95 and a support of 154.92 with a secondary breakdown of 153.91. And you can see right here on the 5-minute chart, if you're just following the chart with the volume, right? So here's the massive volume, right? And we have a low of this candlestick of 156. Well, once it breaks that low with all that massive volume and another secondary volume bar that's higher than the previous, you're going to see that it's going to go ahead and break down. And then it's typically going to trend down following that 4 EMA for the most part until potentially it goes and it breaks the 8 EMA, right? So it really never closed. It closed above the 8 EMA here, but it still had more to go right on down here, right? So if you're just watching and you're following these stocks, Momo again, when you break it down and you're looking at the trade, right? So here we had a massive gap up and here, okay, so massive volume, but it didn't break it again until 940. But I would go ahead and set an alert right there to say, hey, this stock it's got the volume behind it, but look at this massive volume, massive buyers that jumped on board, right? And they pushed it up and then they brought it back down. So then if this gets broken again, this resistance level where you can see, if you think of it mentally, right, that you've got all these sellers that are lined up right here, right, for a head and shoulders type scenario. So maybe they put their order on, they go ahead, they take it off, they let it break above, they say, okay, we're going to go ahead and sell some more up here even higher if we want to short it, then they put the order back on. And if you think about this in if you can visualize it in your brain as you've got all these orders that are stacked up right here, right? So if those orders keep getting stacked up and then that keeps dropping lower and it keeps dropping lower, then those sellers are moving their sells lower down. So now this one, after it broke up here, after the 4 crossed over the 8 EMA, that would be a pretty good indication that it's starting to take a bearish momentum, right? And it coincidentally happened right at the open and close of these 2 candles right here, pretty much, right? So if you're starting to see that that's changed, that's going to be a good trend change indicator on a shorter time frame, not on a massive time frame. One thing I know that many people always like to look at is where are we going to go with a SPY, right? So I'm big with using Fibonacci's as well on my trading. So if we look at where are we going to go with the SPY, I like to really look at back in a bigger time frame, right? Because what's going on up here? To me, it looks like a head and shoulders setup. We have this big monthly candle that's gone ahead, and now we are below the 4 EMA on the monthly candle. It's 283.10 for the monthly, and 282.64 is where we are right now. The high of this candle, or where it closed, was 281.90. So if we break below this shoulder, in essence, then we're going to more than likely be going down further, at least down and testing the 21 EMA right here. Because if you watch, many times we tested it, we only really broke below back in December. But that 21 EMA has been holding. It held back here in June 1st, never came down and touched it here. But then when we touched it back in October of last year, we bounced, went up, came down, broke it, and then we've held above it ever since. So if we are going to break down further, breaking the 8 EMA of 279.60, then we could continue on down here and then test and see if we can break this support here of 270. If we do break the 270 area and the 269.35, it looks like we will be heading downward in the overall bigger scheme of things. When you start looking at the weekly chart, going in a little bit closer. So we didn't close below the prior week, which had a low of 279.93. So if we break below that 279.93, there's a good likelihood if we close this week's candle below that, and you can see again here it tested the 21 EMA and it bounced up. So if we test this 21 EMA again at 281.58, then and we break below it, you can also see it's really a support right here that's been formed, and then it could be a potential downward side. Any questions, guys? So really in all of my trading and everything that I've done, it has always been looking to help other people along in the way. And that's basically what I try to do on a day-to-day basis is I try to share and really try to help people get along in their trading, just like Mir is trying to help them as well. You know, there's many people out there, and it's tough because the trading world is you against a computer. You have your mindset, and if you have a bad day of trading, then you might, you know, it might throw you off. So one thing that's really important for me is if I have a lot of stuff going on, say my dad just fell, his health isn't the best. If my mind is occupied and you're not there 100%, I might recommend paper trading, because if you're not going to be trading properly with the right mindset, why throw your real money at the market? Go ahead and try to protect the capital. You can still trade the price action, but just trade with smaller capital, or trade with Trevor's asking, you know what? I don't know. That's a good question. Do you want me to email you guys the slides or email? I can email them out. I believe I'm going to get email addresses. I can.
Yeah, after the event, we normally send out replays about 24 hours. Well, about 24 to 48 hours after the event, we send out replays of of uh, um of um of everyone's presentation. So to answer your question, Trevor, yes, the replays will be sent out, and you should get them either by tomorrow or on Thursday.
Awesome.
Okay.
And yeah, if I don't know if you guys want me to email out PDFs, I can send it to the main
You can do that
Traders Talk
also.
Live, and you guys
Sure.
can send it out too. Yeah. Um, so really, with the mindset in trading, if your mindset is not there, if you are not dedicated to the market when you sit down to your computer, it's not going to be the best day for you likely. It does take proper initiative and discipline daily to profit with the market. You can always get lucky, but those lucky days will, if you don't have the proper discipline, will probably uh, not outrun the good days. Thank you, Trevor. All right, well, I am pretty much done. If you have the next speaker that is ready, or if anybody has any other questions that you guys would like to have me answer, I'm happy to answer them since I totally blew through everything. Um, I will
Yeah, our
also,
next presenter, he's actually not here yet. I will
okay.
send him an email or give him a call pretty soon. But yeah, if you guys have any questions at all for Jane, feel free to ask away. You don't have to
And
be
I'll
shy.
let Yeah, I'll let you guys know. Yesterday, I literally have people every single day that have messaged me pretty much since I put myself out there saying, "Hey, are you teaching? Are you training? Are you doing this?" And honestly, with two little ones, life can be a little hectic overall. But I finally put together a little bare basics, absolutely zero knowledge for people. So if you know anyone or if you feel like you know nothing about trading, then I do have that available on my website, CJ and Trade, and I will be starting out working as a moderator in the training pit is going to be what the name of it is, and that's going to be part of the Stock Whisperer, umbrella, where it's really a website that's geared towards traders that want to start off with the right basis and the right overall knowledge from the beginning. And then you can graduate to another room. It's not meant to be something that's there that you necessarily just go to every single day, but it's something to help you get your ground platform properly. So that's going to be something that I'm really excited about because there's nothing better than being able to change somebody else's life by teaching them how to trade themselves and how to become profitable. Do I trade the US exchanges only or Canadian exchanges? You know what, Trevor? Actually, I have a pretty cool slide. Let me just find this really quickly. And it's going to take 2 seconds. Do, do, do. Um, it was from my slideshow that I just did for my training series. And you can see the reason as to why I am trading the US market as opposed to here we go, the US market versus any other market because the US market has the largest market cap, right? So let me go ahead and get rid of this and this, and I'll pull this slide up over here. Let's see if this goes up there for you guys. Whoop. What trade do I want to go to? This slide. I want to go to slide number 14. So you guys can see a little snapshot. So this is the reason why I trade the US stock exchange, because you can see the US stock exchange has 19 trillion people, or excuse me, $19 trillion in the valuation of the exchange overall. So this is the top 10 exchanges around the world. And the Canadian Stock Exchange, if you think about it this way, all of Canada has less inhabitants than the entire state of California. So there's just going to be less volume traded. There's going to be less people typically that are in the marketplace. And so why not go ahead and trade where there's higher volume, there's higher liquidity, right? Because if you're intraday trading, the volume is so important to be able to get in and out of a stock. If you get into a stock and they typically have 50,000 shares that are traded every day and you buy 5,000 shares of it, well, you're 10% of that daily average volume, it's likely going to be very hard to get out. So it's important to be able to trade somewhere where there's a lot of liquidity. And for example, the SPY, the S&P, the SPY ETF is the most heavily traded ETF around the world. So that is super, super liquid. On Friday morning, it had, or maybe it was Thursday morning, it had 1 million shares traded prior to the market even being open. So something is like that is very important to consider because you want to go ahead and trade something that you can get into and out of very easily. And Jorgen, I'm not sure, what's your question? Which website? What do you mean by which website? Are you talking about the new training or my own personal website? Mine. So mine is simply, let me see, send to all. If I can type and respond, it's cjanetrade.com is my website. So let me go back here. If I can just go back right there. So my website's right here, cjanetrade.com. And then the other website, uh, they are gathering people's names right now for the list of everybody because the actual website, the new training room is not going to be open until the until probably the first week of August. So let me see if I can answer. Huh, can I paste right here? There you go. Send to all. Did you get that? So that's going to be where you can sign up if you are interested in participating in the brand new traders training room, the training pit. So that it's really meant to be a place where somebody can go for a month or two and really get their feet wet in trading and learn how to do it properly. And because in trading, if you have bad habits, it's going to be much more difficult to break the bad habit than to continue good ones. All right. Anything else, guys, that you'd like to cover? Any stocks that you'd like to look at? Any other questions about trading strategy? There's literally so much information in the trading world, and it can be overwhelming at first, but honestly, and there's so many different ways to make money in the market. That it's got so much money in the market. However, it is manipulated. And once you can figure out rules to follow that manipulation or to protect yourself from the manipulation, you are going to profit much more and you're going to be able to succeed very well. RTN. I don't understand what RTN is. Oh, RTN stock. I'll pull it up for you. Okay. Oop. And if you guys don't know TradingView, this is TradingView. It is a free uh, charting platform. And they also have a great, Raytheon. So look at it on the 15-minute chart. Now, Jurgen, are you looking intraday trading, swing trading? Are you in the stock? Are you looking to get into it? If we look at it, we start backing it out even further. As many stocks. So this blue line right here is going to be the 50 simple moving average. This is the 200 simple moving average. So right now we have, if this is able to cross above, you could have the golden cross, so it might be really nice. If we go ahead and we look at it and we draw a bit of a trend line as well, you've got a bit of resistance that you're coming.
I don't know who's ahead of me.
Sorry?
Sorry about that. That was
That's okay.
actually the next speaker. He just came on. You can
Okay.
finish the presentation.
No good. Jurgen, I don't know how far out your call option is, but it looks like it is holding that 21 EMA right now. Well, it's just breaking below, and you do have the 4 crossing over the 8, so it might be potentially turning into a downward trend as it touched the trend line here back on the 21st of May, and it's been pulling back, and it broke below, it hit the 200, pulled back, and it broke below the 50 SMA. So that would be my analysis of Raytheon right now. It looks like even though they are talking about, sending that Trump was sending war items to Saudi Arabia, that this one still looks like it's in a downward trend overall. And a great way to see that is just continue pulling it back. Further back you go. So the further back, the clearer the trend is going to be. And look, I drew that trend line off of the daily, and it's held it fairly well on the weekly as well. All right, guys. So I hope you guys really enjoyed my presentation. Thank you for being here. I know we do have the next speaker that is lined up. If you ever have any questions, feel free to email me at carpeprofit@gmail.com, or you can also reach out to me on Twitter or Instagram or LinkedIn. I'm very accessible and always willing to help other traders as well.